When you got into backtesting, can you when people ask you what is backtesting, how do you define it for people?
Just keeping it simple, going back in historic data and having a rules-based system and then applying that to historic data over time.
Were there specific pairs that you were looking at?
Mainly just I started with the major pairs and then I'm shifting into all the cross pairs.
Got
so
it.
mainly just a lot of the GBP.
Which makes sense. What's the number one thing, out of all the data that you've looked at so far with the ASFX systems, what's the number one thing that stands out to you the most as a unique data point? Was it the time of day, how many entries, what pair, what stands out the most through your testing so far?
If we're going with the parameters, I think with that TDI, if it's swapping or if it's flat or rising or falling, depending on which way of the direction of the trade. So that is a very powerful metric to keep in mind when looking at trades. So, and also coming through that, the EMAs, obviously trading counter trend or with trending, massive difference on how to trade the outcome. But with our system, when you're trading with our entries, you're more times than less, you're hitting like 1R, 1.5R, like 90% of the time. So obviously it's good to know that metric and how that kind of performs, because then you can kind of adjust risk and how your trade management around it.
But what do you say to people that when you because what you just said sounds crazy to some people. They're like, you're hitting 1R, 1.5R, 90% of the time. Like, people don't believe me when I explain to them how accurate these signals are. I know how you justify it. It's with this testing, but do you have anything else that you've told people that I could try to use when people ask me, how do you justify that type of a win rate? Where do you think it comes from? What has your testing told you that it comes from? I know you said the TDI is the most important thing. The EMAs are important. Is that where the edge comes from that makes it such a
I believe so. So basically the parameters we need in order to get our signal, when everything aligns and we get that entry signal, we just get that push. And I think because we're having such a tight stop in our entries, we can see that price kind of go in our direction, in our favor, really quickly. So,
no, go ahead. Sorry. No, go. I didn't mean to cut you off.
More times than not, once you get a low probability setup, so let's say you have 2 or 3 different knocks, let's say you have a swapping L50 going counter trend and you're in the Asia range, the signal still presents. You're still going to get that pop, but you're more or less going to get stopped out, right? Or break even, depending how you manage your trade. If you put your stop to break even, exactly.
Right. So how important has the fact that you are reading? I mean, where does risk reward come into play when it comes to your back testing? I guess is a good question.
I think it comes into levels. So I think we were discussing this earlier. With the A1 system, for example, we know where we put our stop. And because we are using EMAs as our kind of significant level and our zone, when we are putting our stop either below an EMA or just below it, we know that it should hold that level. So being able to calculate that risk, and if it obviously goes below that level of price reverses, you don't want to be in that trade. So having that risk and knowing where price may come to, based on our other parameters, such as the Asia session high,
EDR.
Exactly. Yep. So being able to have all these parameters where you can kind of justify and build a risk profile just by putting all these parameters in place and just analyzing very basic price data and the indicators we use has given me a much more better perspective on how risk works. And when price reverses, you just want to leave it and maybe look for a different entry or just look for a different pair.
Do you find that the back testing can make you overanalyze some of your trading in the moment, though? Yeah,
definitely. So
how do you balance that out? I guess it's a good question too.
Definitely a good question. So what I've come across is definitely you get more analytical in your analysis. You start questioning it. You start having, really kind of analyzing what's going to happen because you've had this back-tested data. The best way for me was just to focus on how the system performs. So the outcome of my trading, my back testing, using the parameters I'm testing. So all I have to do is shift those parameters into my live trading, and whatever happened to the outcome, you don't worry about it. So you
detach the emotion to it.
Exactly. So you just follow the process you've been doing in historic data. You go through bar by bar, you find the entry signal, you put all those parameters into play, and you take the trade. It's exactly what you do. You shift to a live market. So initially I was very kind of analytical. I was kind of analyzing it a bit too much, but just follow exactly how you're kind of doing the back testing and just pull the trigger when the trade presents.
For people that are new to backtesting, what do you recommend like as the first step to start doing it? Because a lot of people have been overwhelmed by it. They look for videos on my channel. I have one, I'll link it below, about how I do my markups and stuff like that, but this one will be in that same realm. But what do you tell people that are new to it and haven't done it? How do you get them started?
Basically, build out, like, even do it on paper.
Okay.
So write on a piece of paper your entry date, entry time, the pair you're trading, the signal that's presenting. So if you're in ASFX, A1, D1, or D2, and then write down your entry time, entry price, stop loss, and you take profit. And then
just simple journaling like that. Simple.
It's very simple. No,
almost the same stuff we have in the trading journal.
Exactly like that. And then just go through historic data and just write down, like, when the trade presented, you write down the date, the time, your stop loss, your entry price. And then
it almost should not be a matter of if you would have taken it or not. It's does it fit the system or not?
Did it present? Yeah.
Yes. Does it present? And this has to have rules, and you have to really have to have a checklist to work through to get to that point. But yeah, so you tell people to just keep it simple. I love that.
Keep it simple. I go more detailed in my trading, but that's just me personally.
But dude, you didn't start that way. You didn't start that way. Day one, you didn't do that. You know what I'm saying? No. Day one, my markup sucked, but you get better. And now I could do 10 of them very quickly now. You know what I'm saying? So I think you're 100% right, but it's always about taking that first step. Yeah. What were you saying?
And coming back onto, like, if you just never done back testing before, the markups since joining ASFX, like, the markups are a massive, massive advantage in back testing as well, because you have how price reacted, how price moved. You have kind of that its own characteristics on that pair and how it moves. So that's just having that in the back of your head, and also being able to click onto that screenshot of how the trade played out. Massive. For
the people who say, I totally agree with you. For the people who say, I don't need to do back testing, I just practice when I'm live in the market, what do you say to that?
I think if let's say, for example, you've just found a system online that hasn't been back tested. Like, let's say on YouTube, you see all these strategies. Let's say you hit that strategy like in real time. Let's say you open up your charts, you open your USD, the setup present, and you take it, and it's a winner, right? Yeah. If you've never done back testing before, what happens if you take the next 5 trades and they're all losers?
Right.
You don't have that confidence or data to know that, hey, maybe this system had
5 trades in a row. Right.
Or maybe it sucks. Exactly. But you're not going to have the confidence to go take that 6th trade that would have just made back maybe all 5 losses. You know what I mean? So without that data and without kind of back testing and, kind of having, like, with ASFX, like, I had enough trust in you to kind of just go straight into demo, like, learn the system and just see how it performs.
Exactly. But you went then back and started doing the testing.
And then I went back and started testing it
to build your confidence
because
and make you independent.
Exactly, because ASFX systems are, proven and tested.
They're testable. Anybody can do it. Anybody can go back and test what we teach in the courses. 100%.
And it's a very easy signal to present in the market, and very easy to test as well, because we're using EMAs. So there's not crazy like zones or anything. You're not jumping on the high time frame, the 4 hour, to find out structure zones and then come back to the 15-minute and start. Like, it's the signal presents in the 15-minute, and then doing all the 1 hour, 4 hour and higher time frame analysis just complement our trades. So 100%, having no back testing data or not proving a system.
It's crazy to then think you would put real money into that. Right.
Exactly.
Crazy.